Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets. It is Monday, the 28th of March, and quite a few interesting, intriguing situations today. Starting off with Argo Blockchain, which has obviously been in the doghouse for several months. But while we were not watching, we've got a bullish divergence line there from back in January, which can be the start of a rally. Third bounce on the line there can mark a decent entry point, and that's sort of been the case here around the low 60 pence area. Obviously, shares remained in consolidation mode until they broke the 50-day moving average and that line of resistance from December around the 70 pence level. So ideally, the shares remain above 70 now, breaking the neckline resistance rather from the middle of March. Initial target here up towards that line of resistance from September, and the top of the triangle from January around 91, 92 pence. Maybe that'll be seen over the next few weeks, but above 70 looking rather better at Argo than it has for quite some time. One of the messages, or maybe the main message from the Audio Boom daily chart, is that any bounces or any dips towards the 50-day moving average can be regarded as buying opportunities. We had a lot of that in May to June last year. We had that back in August, September last year as well. And all the way along, really, we've seen the 50-day line come into support, especially one-day test in January and a couple of tests so far this month. Looking good in terms of the near-term pattern here. We've got that rising trend channel from basically the end of October, and above the 50-day line and the floor of the channel around £18. We're looking for £26 as the 1 to 2 month target here. Little bounce there off the uptrend line in the RSI window as well to help things along. Like to see an end of day close through around the 1930 area, which is recent resistance, just to underline the move to the upside, or the potential new move to the upside for the shares. On to Chariot, which has covered itself in a degree of glory over the recent past. We've hit that top of that trend channel there, which was the rather ambitious target we were looking for. That's from basically this time last year, so say £13.90. End of day close above that, and we could be looking to a steeper trajectory. November trend channel heading towards 20p rather, and that could be seen over the next 1 to 2 months, or at least 1 to 2 months following a break of 14 pence for Chariot. At this stage, only really well below 12 pence on the floor of the channel there, really delaying the upside scenario, but not a bad risk reward there. 12p to 13.6 where we are at the moment, then up to 20 as the potential target. Chunky news from DeepVerge, which is rehabilitating itself on the fundamental front at the moment. Looks like it also may be rehabilitating itself on the technical front as well. We had the low there initially in March around 12.4 pence. We're back above that now, so that's a bear trap. We've also got decent bullish divergence there in the RSI window, so lower lows for late March, but higher RSI trace. Just looking now for a break of that resistance line there from January around 13.5 pence on an end-of-day close basis. That could take the shares up to the upper teens, which was the previous resistance, and also the area of the 50-day moving average. So let's see if the shares can come up with the honours. Always intriguing to look at Russian stocks or Russian-focused stocks, and first one today is Eurasia, which continues to have its little supportive RSI uptrend line there. I suppose we've also got an uptrend line there from the beginning of the month within what looks to be a triangle formation. So here we have a situation where we want to see the shares break 11 pence. So they can break 11 pence, then the next level up here could be towards 16 pence and the 50-day moving average, and that's also the top of the gap that we had, the gap down that we had at the end of February. Support now up to around 8.8 pence, maybe up to 9 pence, so looking rather better than it has in the recent past. Moving along to another stock, which is doing what is one of the best things you can do, really, sort of slow build for the shares. New near-term highs for Emerson at the moment, so breaking 7.3 pence resistance, which is something I was waiting for before covering the stock again. Top of the channel from back in April last year, heading up towards the 9 pence area, and we should see that hopefully by well before the end of next month, i.e. this April. Stop loss, anything above, anything below 7 pence would be a surprise. We've got the 50 and 200-day moving average rising, so I would actually suggest that 9 pence is about the minimum that we'll see on the upside over the near term for Emerson. Moving along to a stock which keeps on giving, Harvest Minerals, also in the fertilizer area, and here you can see that beautiful progression to the upside, and next target here is up to 18 or 19 pence, which is that resistance line from April last year. But I would venture to suggest that the shares are now heading in a steeper trajectory within a rising trend channel from back in December. Floor of the channel currently around the 15 pence level, and the longer we stay above that, the greater the chance of a move up towards 26 or 27 pence, perhaps by the end of May, and maybe even sooner. A bit of a glitchy chart there, but above 16, looking for 28 on Harvest over the near term. Stock where there seems to be a bit of a buzz at the moment is KEFI, which is perhaps rather unusual, but see from the chart that the shares look like they've stabilized at the lower levels. We've got a rising 50-day moving average, which is normally a very good sign when a stock is near the lows. Bear trap for the start of March, just below January-February support, so that's another plus. Want to see, I suppose, 0.9 pence plus to give the shares an initial target here at the 200-day moving average of 1.2. But it does look as though it would not be premature to look for 1.6 or 1.7 pence at the top of that broadening triangle, given the RSI support line, the extended bullish divergence line, and that rising 50-day moving average. This stage only well below 0.7 pence, really delaying the upside scenario. On to Russia-focused stocks again, and here we have Polymetal, which is breaking neckline resistance around 2.2 pence. Above that, we're looking for hopefully towards 4 pence, which was resistance on the way down. RSI looking quite nice as well, so that's pushing up quite well at the moment, and allows scope, I think, for a move towards 3.54 pence, maybe by the end of next month, or the way things are going, rather sooner. Only back below 1.8 pence, really delaying the upside scenario. That's recent. Well, that's basically just below today's support level. Another Russia name, Petropavlovsk, and here just breaking that line of resistance, or just trying to break that line of resistance from earlier in the month. The level there around 2.2 pence. Above that, we could hopefully head up to 4 pence again. So it's almost the same trade on the cards as Polymetal over the near term. Stop loss, that last swing low there, which was Friday's support at 1.25, or I suppose if you can't afford that, which is rather a bit hefty, but just below 1.5 pence if you can manage that. Stock, which to me looks as though it could actually be the next Benz Creek, although it's in a different area, is Sovereign Metals. Very good looking chart here. Lots of unfilled gaps to the upside. Another gap higher today. That is a bullish sign, even though this is obviously not a very liquid situation. The view now is that at least while we're above the floor of the last gap at 28 pence, we're looking towards 42 pence, maybe by the end of May, something like that. We've got the 50-day moving average now rising, which should provide decent momentum for the shares. So pretty exciting stuff there at Sovereign. Moving along to Touchstone, which has gapped up off support after a bear trap. The old support there at 76.5, and we've just had a minor dip below that. So bear trap gap reversal. Above 77 pence, looking towards at least £1, which is the initial March resistance for the shares. So, and there's also a decent look on the RSI indicator with the bullish divergence there on that particular situation as well. Finishing off with a stock which has delivered a decent update today in terms of production. We've got UOG. Hopefully on this occasion or over the next week, we'll see the shares climb back above the 200-day moving average at 2.9 pence. If they can do that, then we could be up towards 3.6 pence. The upside valid while we hold above 2.5 and the 50-day moving average. That's it from me today. More updates tomorrow.